A name once used to sell billion-dollar towers across the world is now allegedly being avoided by the very developers who once chased it. A luxury empire built on visibility, power, and global prestige may be facing something far more dangerous than financial loss: silent reputational collapse. Because when investors quietly stop trusting a brand, the damage usually begins long before the public notices it. And according to reports surrounding Trump Tower Australia, that process may have already started. But what really frightened global developers behind the scenes was not the building itself. It was what the Trump name had started representing. And by the end of this video, the bigger warning behind this collapse may completely change how you see modern business empires forever. Welcome to Currency Watch. If you enjoy deep economic stories, business warnings, and the hidden psychology behind global wealth and power, then take a moment to subscribe, especially our wise viewers who have seen markets rise and collapse across decades. Your experience matters here. And before we begin, tell us in the comments, which country are you watching from today? For decades, the Trump name operated like a financial shortcut inside the global real estate industry. In cities filled with luxury towers competing for attention, the brand promised something developers desperately wanted: instant recognition. The formula appeared simple. Attach the Trump name to a skyscraper, surround it with gold branding, luxury marketing, celebrity media coverage, and political influence. And the project immediately gained visibility that most developers could spend years trying to build alone. In many parts of the world, the name itself became the product. Long before Trump entered politics, the Trump Organization had already mastered the art of selling identity instead of concrete. Buyers were not simply purchasing apartments or hotel rooms. They were purchasing association, status, exclusivity, and proximity to power. That strategy worked extremely well during a period when global luxury markets were driven heavily by symbolism. International investors wanted assets connected to names recognized everywhere. In that environment, visibility itself became a form of economic value. But modern markets began changing in ways many legacy brands failed to fully understand. The international business environment became more politically sensitive, more reputation-driven, and far more unstable than it had been decades earlier. Social media accelerated public scrutiny. Political identity became impossible to separate from corporate identity. Global investors became increasingly cautious about controversy exposure. And slowly, the economic meaning of powerful public brands began shifting. This is what makes the reported cancellation of Trump Tower Australia so strategically important. On the surface, a canceled tower project may appear ordinary. Real estate projects fail all the time. Financing changes, market conditions weaken, developers reconsider expansion plans. None of that is unusual, but critics surrounding this particular collapse pointed towards something much deeper. According to the claims being discussed around the project, the concern was no longer construction risk alone. The concern was the Trump brand itself. That distinction changes everything, because once investors begin viewing a globally recognized brand as a reputational liability instead of a commercial advantage, the entire economic equation behind luxury development starts breaking apart. Developers do not think emotionally, they think structurally. Their survival depends on predicting future buyer behavior years before construction is completed. Every branding decision becomes a calculation about long-term demand, financing confidence, resale value, political stability, and international perception. And in modern global markets, perception has become extraordinarily fragile. A politically divisive identity may energize certain audiences while simultaneously reducing institutional trust elsewhere. That creates a dangerous imbalance for international expansion projects that depend on broad buyer participation across multiple countries and cultures. Luxury towers are not sold only to domestic political supporters. They are marketed to international capital networks, wealthy foreign buyers, multinational investors, and institutions that prioritize stability above ideology. This is where the warning signs become difficult to ignore. If developers reportedly concluded that the Trump name could reduce buyer confidence overseas, then the issue extends far beyond a single Australian project. It suggests that political polarization may now be interfering directly with global commercial scalability. That represents a major structural threat for any personality-driven empire. Historically, the strongest luxury brands maintained a degree of political neutrality in international markets. Whether customers were from Asia, Europe, the Middle East, or North America, the brand identity remained commercially flexible. The goal was always expansion through broad aspirational appeal, but once a brand becomes deeply connected to ideological conflict, neutrality becomes difficult to maintain. Supporters may still remain intensely loyal. Media attention may continue generating visibility. But international developers and institutional investors often evaluate risk differently from political audiences. Their primary objective is predictability, and unpredictability is expensive. A controversial reputation can complicate financing discussions, narrow potential buyer pools, increase public relations exposure, or to create uncertainty about future demand years into the future. Even if a project succeeds initially, developers must think about long-term sustainability, resale markets, and institutional partnerships. That is why reputational concerns are now treated almost like financial variables inside modern boardrooms. The dangerous reality for large public brands is that collapse rarely happens all at once. The process often begins quietly. A partnership disappears, an international deal quietly fades away. A developer stops pursuing expansion, institutional interest weakens behind closed doors. By the time the public notices visible cancellations, the underlying strategic retreat may already be well underway. And that may be the most important warning hidden inside the Trump Tower Australia story. Because this situation is no longer only about Donald Trump himself. It reflects a much larger transformation happening across the global economy, where politics, reputation, media exposure, and commercial value are becoming increasingly impossible to separate. In earlier eras, controversy could sometimes strengthen luxury branding by increasing attention, but modern global markets appear to be evolving differently. Today, attention without institutional trust may no longer be enough to sustain international expansion, and if one of the most globally recognized real estate brands in modern history can reportedly encounter resistance because of reputational concerns, then every entrepreneur, developer, and corporate leader should be paying close attention to what happens next. Because the real danger to major business empires may not come from financial weakness alone. It may come from the moment the market quietly decides the brand itself has become the risk. There was a time when powerful companies feared invisibility more than controversy. In the modern media era, attention became currency, headlines created momentum, viral recognition created market value. And for years, few public figures understood that system better than Donald Trump. The Trump brand was designed around dominance of attention. Every tower, every interview, every public statement. Every television appearance reinforced one central business strategy: remain impossible to ignore, and for a very long time. That strategy worked. The constant visibility amplified the perception of power. Buyers associated the brand with confidence, influence, and elite status. In luxury real estate markets, perception often matters as much as physical construction itself. A globally recognized name can increase pricing power before a building is even completed. But the same mechanism that creates rapid expansion can eventually create strategic overexposure. That is the stage many analysts now believe modern global brands are entering. Because attention behaves differently once politics fully enters the equation. A luxury brand normally survives by attracting as many wealthy buyers as possible from different regions, cultures, and belief systems. The objective is commercial universality. The fewer ideological barriers attached to the brand, the larger the potential market becomes. But once a personal brand becomes deeply political, neutrality begins collapsing. And when neutrality disappears, our market flexibility often disappears with it. This is the hidden economic danger behind the reported Trump Tower Australia collapse. The issue may not simply be whether people recognize the Trump name. Recognition is still extremely high worldwide. The deeper question is whether recognition still produces broad commercial comfort. Those are two completely different things. A globally recognized brand can still become commercially difficult if buyers increasingly associate it with instability, ideological conflict, or reputational exposure. That transformation usually happens slowly, then suddenly. At first, controversy appears manageable because visibility remains high. Media attention continues, supporters remain loyal, public discussions intensify. From the outside, the brand still appears powerful because people never stop talking about it. But inside executive boardrooms, a different conversation quietly begins. Developers start asking harder questions. Will international buyers avoid the project? Will political controversy reduce future resale demand? Will institutional lenders become cautious? Will future governments or regulators create additional pressure? Will luxury consumers view association with the brand as socially risky? These questions are no longer emotional. They become financial calculations. And once financial institutions begin evaluating reputational volatility as measurable risk, the economics of expansion begin changing very quickly. This is especially dangerous for internationally licensed luxury projects. Unlike domestic political campaigns, international real estate markets operate through broad coalitions of capital. A tower in Australia may depend on investors from Asia, buyers from the Middle East, financing linked to global banks, and partnerships involving multinational institutions. That system functions best when the brand attached to the project remains commercially neutral and globally acceptable. But a politically charged identity can fracture that stability. Some investors may still strongly support the brand. Others may avoid it entirely. The problem for developers is not disagreement itself. The problem is unpredictability. Unpredictability creates hesitation. Hesitation slows investment, and slowed investment can quietly destroy billion-dollar projects long before construction even begins. This is one of the least discussed realities of modern capitalism. Today, large corporations and investment firms increasingly fear reputational instability more than traditional market competition. A competitor can be studied, market conditions can be forecasted, interest rates can be modeled, but public perception has become dangerously difficult to control. One political controversy, one viral backlash, one international incident can rapidly reshape investor confidence across multiple countries at the same time. That environment punishes brands built too heavily around individual personalities, because personality-driven empires often become emotionally tied to the public image of one person, rather than the structural stability of the institution itself. When the individual thrives, the brand expands rapidly. But when public perception becomes polarizing, the entire business structure absorbs the pressure simultaneously. This may explain why some international developers reportedly began viewing the Trump brand differently in recent years. Not because the name lacked recognition, but because the recognition itself may now carry strategic complications. And this phenomenon extends far beyond Trump alone. Across the global economy, companies are discovering that visibility does not automatically translate into long-term trust anymore. In fact, excessive visibility can sometimes increase vulnerability. The more politically symbolic a brand becomes, the harder it becomes to maintain universal commercial appeal. This creates a dangerous paradox for modern entrepreneurs. The same media exposure capable of building an empire can eventually trap that empire inside ideological conflict. And once markets begin associating a brand more with political identity than commercial reliability, international growth becomes dramatically harder to sustain. That is why the reported collapse of Trump Tower Australia matters far beyond one canceled skyscraper. It may represent an early signal of something much larger happening beneath the surface of global business, a future where the market no longer rewards visibility alone, but instead rewards brands capable of surviving political turbulence without becoming consumed by it. Most people imagine business collapse as a dramatic event. A company declares bankruptcy. A skyscraper stops construction. Stock prices crash. Employees walk out carrying boxes. But in reality, major business decline rarely begins in public. It begins in silence, inside private meetings, confidential risk assessments, investment committees, and conversations the public never hears. By the time ordinary people notice visible damage, the real decision makers may have already been retreating for years. That is what makes the reported Trump Tower Australia situation so strategically fascinating to analysts watching global capital behavior. Because the most important signal may not be the cancellation itself. The most important signal may be what happened quietly before it. Large international developments do not survive on branding alone. They survive on confidence ecosystems. Banks must feel protected. Institutional lenders must believe future demand will remain stable. Luxury buyers must trust future resale value. Insurance groups must evaluate political exposure. Global investors must believe the project will remain commercially attractive for decades. If even one part of that confidence chain weakens significantly, the entire structure can begin destabilizing underneath the surface, and unlike public audiences, institutional investors rarely react emotionally or publicly. They simply become cautious. That caution is often invisible at first. Phone calls become slower. Negotiations quietly stall. Partnerships lose momentum. Investors request additional reviews. Developers begin reconsidering timelines. Nothing dramatic happens immediately, but momentum starts dying silently. This is why reputational risk has become one of the most powerful hidden forces inside modern global finance. 20 years ago, many developers primarily focused on location, construction cost, demographics, and projected demand. Reputation certainly mattered, but political identity was often treated as secondary. Today, the equation is entirely different. Modern financial systems operate inside a hyper-connected media environment where public perception can move markets faster than physical fundamentals themselves. A single controversy can instantly spread across continents. Social media can reshape brand perception globally within hours. Political polarization can influence consumer behavior, institutional partnerships, and investor confidence simultaneously. That environment creates a dangerous new reality for highly visible personal brands. The stronger the emotional reaction attached to the name, the higher the volatility surrounding future business expansion. And volatility frightens institutional money, because institutional investors do not chase excitement. They chase stability. This distinction is critical. Public audiences often confuse visibility with strength. But inside global finance, constant controversy can sometimes signal fragility rather than power. A business empire heavily dependent on one individual's public image becomes exposed to the emotional swings surrounding that individual. Every political battle, every public controversy, Every reputational shift begins affecting the commercial structure tied to the brand itself. Over time, this creates what analysts sometimes describe as concentration risk. The entire value system becomes psychologically concentrated around one personality. And when markets begin questioning that personality's long-term stability, the ripple effects spread everywhere at once. This may explain why some global developers reportedly became hesitant about projects carrying the Trump name overseas. Not necessarily because the brand lacked fame, but because the fame itself may have become economically unpredictable. For luxury real estate, predictability is everything. Developers constructing billion-dollar towers are making bets on future demand years into the future. They need confidence that buyers will still desire association with the project long after headlines change and political climates evolve. If uncertainty enters that calculation, institutional enthusiasm can weaken rapidly. And once institutional enthusiasm disappears, expansion becomes extremely difficult regardless of public visibility. This is the brutal irony hidden inside many personality-driven empires. The same media machine capable of creating enormous growth can eventually create structural exhaustion. Permanent visibility increases scrutiny. Increased scrutiny increases polarization. Polarization increases reputational volatility. And volatility weakens institutional confidence. Eventually, the brand stops functioning as a stabilizing commercial asset and begins functioning as a variable risk factor. That transition is one of the most dangerous moments any global business can face. Because unlike financial collapse, reputational deterioration often spreads invisibly. Balance sheets may still appear strong, public attention may remain massive, supporters may remain loyal, but behind closed doors. Decision makers may already be repositioning themselves away from future exposure, and history shows that once institutional retreat begins quietly, reversing it becomes extremely difficult. Many major empires throughout history failed, not because consumers suddenly disappeared overnight, but because long-term confidence slowly eroded underneath the surface while public visibility continued distracting everyone from the structural weakness forming underneath. That is why the Trump Tower Australia story matters far beyond politics. It represents a possible case study in how global financial systems now evaluate reputation itself as infrastructure, not decoration, not marketing, infrastructure. And in modern markets, damaged infrastructure eventually affects everything connected to it, which raises an uncomfortable question many business leaders may soon face themselves. In an era where media exposure can create fortunes overnight, how many companies are unknowingly building their entire future on reputational foundations that may already be starting to crack? Every major business empire survives on a narrative, not just revenue, not just assets, not just visibility. A narrative. Investors must believe the future will remain strong. Customers must believe the brand still represents value. Partners must believe expansion is still possible, and markets must believe the story surrounding the empire still makes economic sense. The moment that belief begins weakening, even quietly, the entire structure becomes vulnerable, because markets are psychological systems before they are financial systems, and that may be the deeper warning hidden behind the reported Trump Tower Australia collapse. For decades, the Trump brand sold a very specific global story, the story of unstoppable success. Luxury without limits, power without decline, expansion without resistance. Every tower reinforced that narrative. Every international licensing deal strengthened the perception that the brand remained commercially magnetic across the world. But global brands become extremely fragile once the market begins questioning the story itself, not the building, not the balance sheet, the story. Because once confidence in the narrative weakens, perception can reverse faster than most businesses are prepared for. A luxury brand that once symbolized aspiration can suddenly begin symbolizing controversy. A globally recognized name can slowly become politically exhausting. An empire built on constant attention can eventually become trapped by that same attention. And when that transformation begins, expansion often becomes the first casualty. This is why experienced institutional investors watch international growth patterns very carefully. Expansion reveals confidence. Retreat reveals caution. When a globally recognized brand suddenly struggles to expand into foreign markets, sophisticated investors rarely dismiss it as random coincidence. They begin asking whether something deeper has changed underneath the surface. Has buyer psychology shifted? Has reputational exposure increased? Has the brand become too politically concentrated? Has institutional confidence weakened quietly behind the scenes? These questions matter because modern financial systems are becoming increasingly reputation sensitive. In earlier decades, companies could sometimes separate politics from business operations. Today, that separation is collapsing rapidly. Social media, ideological polarization, activist pressure, and non-stop media cycles now push corporations into political environments whether they want it or not. As a result, global companies are entering a new era where trust stability may become more valuable than raw visibility itself. This creates a major strategic warning for entrepreneurs. Many modern founders believe aggressive attention is always beneficial. They build brands entirely around controversy, personal identity, and nonstop visibility because digital culture rewards emotional reactions and viral engagement. In the short term, that strategy can create explosive growth. But over longer periods, emotional branding creates structural dependence on public sentiment. And public sentiment is one of the least stable forces in modern economics. Once a company becomes psychologically fused with one political identity, one personality, or one ideological movement, its future flexibility begins shrinking. Global expansion becomes harder, partnerships become more complicated, institutional relationships become more cautious, and entire markets may quietly distance themselves from the brand to avoid unnecessary volatility. That may be what makes the Trump Tower Australia story so important beyond politics itself. It demonstrates how modern markets are starting to punish instability differently than they did in previous eras. Today, reputational volatility can spread internationally almost instantly. A controversy in one country can affect investor psychology across multiple continents at the same time. That level of interconnected exposure did not exist for most of business history, and many legacy brands still appear unprepared for how quickly global perception can now change. The dangerous part is that markets rarely announce these shifts openly. Institutional retreat does not usually arrive through dramatic headlines first. It arrives through hesitation, silence, delayed commitments, canceled negotiations, quiet strategic distancing. By the time the public finally sees visible signs of contraction, the underlying confidence deterioration may already be deeply advanced. This is why some analysts believe the real threat facing modern corporations is no longer simple financial competition. The larger threat may be narrative collapse, because once markets stop believing the long-term story surrounding a brand, rebuilding trust becomes far more difficult than generating attention. Attention can be purchased, visibility can be manufactured, publicity can be engineered, but institutional trust, especially global trust, takes decades to build and only moments to destabilize. And perhaps that is the final lesson hidden beneath the Trump Tower Australia story. In the modern economy, the most dangerous moment for any empire is not when critics attack it publicly. It is when global markets quietly begin deciding the future story no longer feels safe enough to invest in.